This is your LMAX exchange technical update for Tuesday, November 15th, 2016. Euro dollar. So the euro is broken down now to a fresh 2016 low after taking out the previous base, which came in around 107.10. At this point, this latest drop exposes fresh downside potentially all the way back to a critical low in the form of that 2015 low at 104.63. At this point, look for any rallies now to be very well capped in the 110 to 112 area. This is a weekly chart right now, so it gives a better picture of where we could be headed over the coming days and weeks. Sterling dollar. So cable has seen a correction in recent trade, but the market is now stalling out into previous support now turn resistance around the 128 area. Ultimately, while the market holds below 128, there's risk for another setback back potentially towards that 31-year low that we saw all the way back in the month of October around 120. Dollar yen. So dollar yen continues with its impressive recovery, with the market clearing next resistance at 107.50 and exposing a fresh upside extension towards next key medium-term resistance at 111.45. At this point, look for any setbacks to be very well supported ahead of 103, with only a break back below recent support around the 103, the 102.55 area to compromise the newly adopted constructive outlook for dollar yen. Euro Swiss. So Euro Swiss is broken down to fresh multi-day lows and is now exposed to a retest of the 2016 base at 106.24. At this point, look for any rallies now to be very well capped by some previous support and resistance at 108. Dollar yen. So dollar yen continues to stall out above 77, and this latest topside failure has put the pressure back on the downside, with the market coming at some key support at 74.21. A break below that low that we had seen back on the 27th of July would accelerate declines down towards 70. Dollar CAD. So dollar CAD continues to race higher, with the market pushing above 135 and now exposed to a fresh upside extension towards next key resistance in the 140 area. At this point now, look for any setbacks to be very well supported into the 130 to 132 area. Kiwi dollar. So Kiwi continues to break down from its 2016 high just shy of 75. The market is now contemplating a break below next critical psychological support at 70, which would expose a potential drop down towards the 65 area over the coming weeks. SPX 500. The S&P 500 continues to show signs of a potential meaningful top despite the latest rally that we saw in the previous week. The market would, however, need to break back below that previous support at 2108, that previous September base, to get things going and the focus back to the downside. Until then, there is risk for a push higher to fresh record highs beyond 2200. Gold. So gold has seen a pullback in recent trade, with the market now gravitating towards critical support at 1200. At this point, while the market does hold above 1200 on a close basis, there's risk for another bounce, with the constructive outlook remaining intact and a push back towards that 2016 peak at 1375. Only a close below 1200 would compromise this constructive outlook and put more intense pressure on the downside.